All right, we made it to the last question. Question number 5 of February, March 23, paper 2. The question 4 was slightly boring because there was too much talking and a little bit of calculation. Number 5 is a mix of both. We have some calculation here, some more calculation, and then some theory at the end. It's a nice question overall. Okay, requirement A is appropriation account, B is a current account for only one partner, and then there are some tick box questions, and then 5 mark advantage, disadvantage question. Very good. Okay, let's review the details and quickly get over with this one. Samir and Punita are in partnership. The partnership agreement provides the following: interest on drawings, interest on capital per annum, a salary to Punita of 11,000. Residual profits are to be shared 60%. That's the profit sharing ratio. Very nicely presented. I think the February March students were lucky because they had a nice paper. Profit for the year, and by the way, the May June students the same. We should get a nice and easy paper. Okay. If you're well prepared, everything is easy, right? Okay, let's just do this. Profit for the year ended 31st December 2022 is 24,600. Okay. There's some capital account balance, current account balance, irrelevant for now. Some drawings, figures, and then we make the appropriation account. Very nice. So we start with profit for the year. The profit for the year is 24,600. 24,600, and we will start deducting and adding things, the relevant, figures. We firstly have interest on drawings. Let's deduct that. Less interest on the drawings. We have 2 people, of course, Samir and Punita. Samir and Punita. Okay. Of course, we need calculations. Interest on drawings is 5% of whatever the drawings are. Oh, by the way, I know I did that, but interest on drawings are obviously added. Okay? We add interest on drawings because the partnership is basically charging the partners. So partners will be contributing this towards the partnership. Okay? We have profit for the year to distribute, but on top of that, the partners are sort of penalized on their own drawings. You take drawings, you have to pay back 5%. It's like cash back, right? You take drawings, you have to pay back 5% in to the partnership. And so the partnership will receive that money, okay? All right. Drawings for the year ended 31st December 2022, 16,000 and 12,400. 16,000 and 12,400. Okay? We can calculate 16,000 times 0.05. That's just 5%. 800. And the other figure is 12,400. That's 620. We add that, right? So 800 plus 620 is 1420. Added, okay? You can add it now, add it later. It's up to you. Next, we deduct the interest on capital, because this is basically partnership rewarding the partners, okay? Interest. In the exam, don't write int, write interest complete, okay? The full spelling on capital for both of them. And don't write it like me, because that's not a good handwriting, okay? I just do it because the board I'm writing on is slightly slippery. Like there's no friction. And so my handwriting is pretty messed up. Okay. 3%, Samir 80,000, Punita 75,000. 80 and 75. 80, 75. Okay. That's 2400. That's 2250. 4650. Please be very careful. It's a deduction, so make sure you don't add it. Okay, you have to deduct this. Show it in brackets because it's deduction. We also need to deduct the salary. By the way, I could have left one line between, but I didn't. So you can. It doesn't matter. Not a big deal. Just your preference. You may leave a line in between. Profit for the year, leave a line. Add interest on drawings, leave a line. Less interest on capital, leave a line. Less salary. It's up to you. Salary, just Punita. It is 11,000 per annum. Okay. Do we need to make any adjustments? Apparently no. A very simple and straightforward question. 11,000. It's a salary paid from partnership to one of the partners, so we deduct. Okay, it's a payment from the partnership to one of the partners. By the way, this 11,000 doesn't disappear. It ends up in Punita's current account. Okay, fine. Let's just calculate what is. This is known as distributable profit, or we can say residual profit if you want. Residual, or we can actually. It's up to you. Distributable profit, residual profit. It's all good. Okay. Distributable profit would even be more appropriate. 24,600 plus 1420 minus 4650 minus 11,000. 10,370. 10,370. That's the distributable profit. Just make sure everything is considered. We consider this, this, this. Now we'll consider that as well. Current capital account was considered, profit was considered, drawings were considered. Yeah, we've considered everything. Information is very limited. Okay, that's residual profit, or let's say distributable profit. And so we just put that in profit share. Samir and Punita. What was the ratio? 60 and 40. 60%, 40% of the 10,370. 10,370 times 60% is 6,222 times 40% is 4,148. 6,222 plus 4,148 is 10,370. And it's nicely distributed. Okay. Nice. Done. 6 marks for that. I think that's too much work for 6 marks, to be honest. I like too much writing for 6 marks, but it's okay. The next one is actually, look, by doing this, you've solved the next one as well, right? You just need to know where the figures go. But other than that, you've solved 2 in 1. Okay. For Punita, what is the current account? Let's have a look. There is some opening balance on the current account of credit 8335. 8335. And this must be on 1st, or let's just say January 1st, 2022. Okay? Because we are dealing with the year ended 31st December 2022. The next year is 1st January 2023. So opening of this year must be January 1st, 2022. Balance brought down 8335. All the adjustments. Well, remember, in the current account, mainly there are 3 debits: drawings, interest on drawings, loss on partnership. Okay? Share of loss. So 3 debits, and the rest of the things are mainly credited. Okay, so what happened during the year? Let's have a look. There was interest on drawing for Punita, charged to Punita basically 620. Okay, interest on drawings. Okay, we put the last date because we don't have any specific dates. Happened June 2022. Don't forget, you also put the drawings figure, not just interest on drawing. You also put the drawings figure in the current account. 12,400 goes there. 12,400 goes there as well. That's drawings for the year. Same date, so no need to update. There were some entitlements as well. Some things were entitled to Punita during the year. We look above, go above and check what went to Punita from partnership. It was interest on capital of 2250. Interest on capital 2250. What else? It was salary 11,000. Anything else belonging to Punita? Share of profit credited to her current account 4148. 4148. And that's a profit share. I think that's it. We're not missing anything, hopefully. Interest on capital covered, salary covered, profit share covered, discount, drawing, interest on drawing, everything seems to be covered. Okay. We'll just balance this account quickly. Put the totals column. Okay, 620 plus 12,400, 13020. That's for the debit side. 8,335 plus 2250 plus 11,000 plus 4148. Wow, too much entitlement. She's earned too much from the partnership. 25,733. The difference will be the balancing figure on the debit side. 25733, 25733. The bigger amount goes on both the sides. 25733. The balancing figure goes on the debit side. So 25733 minus 13020. 12713. 12713. That's balance carried down. 12713 is balance brought down. By the way, credit balance on current account means it's positive. Okay, January 1st, 2023. All right. Samir would now like to pay the expenses of his own private car from the partnership bank account. Okay, so that'd be counted towards drawings, right? It's not a business expense. It's Samir's own expense. So if he's using business bank account or partnership bank account for that, it doesn't change the fact that it's a personal expense. So we count that towards drawings. Partnership's profit for the year won't be affected, of course, because it's not a partnership expense. We won't be counting that towards partnership profit calculation. Samir's drawings will increase if he's planning to use partnership bank account for personal uses. We'll put that in drawings. And interest on drawings is directly connected with that, right? It's directly proportional. Drawings increase, interest on drawings increase. What a question. Let's move on. 3 marks for that. Samir and Punita are considering converting the partnership into a limited company. They do not anticipate any need for additional capital. They don't need capital, but they want to make it, or they are considering converting them to limited company. Okay, 2 advantages. Advise whether they should convert and justify with 2 advantages and 2 disadvantages. Okay, advantages of converting. Let's have a look. They will firstly have limited liability, a very popular example, a limited liability, so they will lose the amount up to their investment, isn't it? Their personal assets are safe. Something goes wrong, their personal assets are untouched. Nobody's going to come for that. Limited liability status is available. There's incorporated business. You know what that means? Incorporated business means a business is legally separate from the owners. Means if one of the owners, or let's say one of the partners, let's say, God forbid, passes away, the business is still survives because it has its own legal identity, right? Separate from its owners, separate legal identity. Let's give a second. I need to respond to a message. All right, incorporated business. What else? They don't need finance, so that's unnecessary. Well, just build upon that, and that's good enough. Look up more advantages. I'm in slight bit of a hurry because someone's waiting for me at the moment, so I just need to quickly wrap it up. Okay. Disadvantages will be, let's say, it may be costly, to form. Okay. More paperwork involved, isn't it? May have to publish accounts. Okay. Accounts may become public as a limited company. So these are the disadvantages. Overall, it's up to you. Your conclusion, okay? Your conclusion. It can be, do not you can also use this fact, the fact that they don't need additional capital is unnecessary to convert. Okay, it may not be necessary to convert since they don't need any additional capital. They won't be really able to benefit from the limited company status unless they want the limited liability. So conclusion, up to you, 100%. You can focus on limited liability and conclude that they should go for it, or you can focus on this point that they don't need additional capital and it's going to be costly to form and organize and run and publish. Taxes will be slightly more complicated. Government will be more involved because it's now a limited company, right? It's registered as a company, so it has a little bit of more processes involved. So it's up to you. Your conclusion. It's your choice. Subjective. There is no right or wrong in this. Okay, we're done with this whole paper. Wish you all the best for your exams, and take care.